Let's give you a sense of what's moving the markets. I'm joined by Warwick Lucas from Vunani Securities. Warwick, a very good afternoon to you. Thank you for your time. South African markets have opened higher, looking at what happened this morning, with the rand also edging stronger as investors await Federal Reserve Chair Kevin Walsh's closely watched Jackson Hole speech. What does Walsh need to tell markets at that speech today?
Thank you, Mpho. So Walsh needs to give the markets, and by markets I mean both Main Street and Wall Street, clarity without pretending that he can give certainty. I think the issue is not just whether the Fed hikes, holds, or cuts at the next meeting. And the bigger question is, what is the Fed watching now? Now, I think these markets want to know how Walsh thinks about inflation, oil prices, the labor market, US fiscal stress, and the bond market. I mean, under his chairmanship, the Fed has been quite reticent, less willing to give detailed forward guidance, and that has made markets a little bit more sensitive to every speech and every data point. And there's always a risk that instead of getting better market signals, you get an added risk premium. So today he needs to do three things. He needs to reassure markets that the Fed is serious about inflation. He needs to deal appropriately with a balance between growth and employment and the strains showing. And third, he needs to explain reactions. In other words, what data is likely to make the Fed more hawkish and what data would allow it to be more accommodating. And if he sounds too vague, that bond market could behave badly. So he needs to sound measured and data dependent.
So could a more accommodating signal from the Fed now strengthen some of the emerging market assets like the rand and the JSE?
I think it very definitely would. I mean, emerging markets tend to benefit when US interest rate pressure eases. So if investors believe that the Fed is less likely to hike, US bond yields can breathe a little bit, the dollar can soften, and global investors can become willing to take more investment risk outside the US. And that's typically helpful for the rand, South African bonds, the JSE. But an important qualification, that is that the reason for the Fed being more accommodative matters. I mean, if the Fed sounds calm because inflation looks steady, that's good for emerging markets. But if the Fed is dovish or sounds dovish because of some sense of deterioration, then the benefit is less likely. So the best outcome for South Africa is not a panic-driven Fed pivot. It's a message that things are on track.
Yeah. Warwick, South African motorists could be in for another increase at the pumps as we head into September, with the latest data pointing to higher prices across all major fuel categories. Diesel remains the biggest concern. What's your take?
Absolutely, it's an issue. I think we're looking at about R1.05 in hike in petrol, probably about 270 in diesel. And I mean, diesel is absolutely the key concern because while petrol matters to households, I mean, diesel matters to the whole economy because of where it's used in commerce and product logistic chains and so on. So when diesel rises, it just feeds straight into the cost of moving goods around the country. And in any case, it's actually the biggest part of South Africa's fuel basket. So, yeah, I mean, we certainly need to be aware that the oil shock is not just about crude oil. I mean, it's right across the board.
And very quickly, before we let you go, producer inflation fell sharply, as we know, in July from 7.5% to 5.7%, reinforcing the recent improvement in consumer inflation. But if inflation is coming down, why aren't South African households feeling any better?
Well, the thing about lower inflation doesn't mean lower prices. It just means the prices are rising more slowly. So, I mean, for the last few years, consumers have absorbed some much higher food prices and fuel costs, electricity tariffs, and for that matter, higher interest rates. So even if inflation falls, the price level is still higher. But producer inflation is measured at the factory gate. It doesn't necessarily all pass through, but it does kind of flag a warning as to what could be coming down the pipeline, unless business conditions get a little bit easier.
Very well. Thank you so much for your time this afternoon. Always a pleasure having you on the show. Warwick Lucas from Vunani Securities, giving us a sense of some of the big expectations for the day.